Hey everyone, in this video I'm going to highlight 3 things about ChargePoint stock that I think every ChargePoint stock investor should know. Now, of course, there's more than just 3 things to know about ChargePoint stock, but at the very least, I think you should know these 3 things about ChargePoint. The first thing is its massive total addressable market opportunity. I will show you just how large this opportunity could be. The second thing is lowered expectations for ChargePoint stock. Just because the industry is doing well and growing doesn't mean ChargePoint is automatically going to do well. And finally, I will highlight a leadership change at ChargePoint with ChargePoint management. So let's jump right into it, starting with the massive total addressable market for ChargePoint.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, ChargePoint benefits with the more electric vehicles there are on the road because that increases demand for charging and charging stations. Well, if you look at a chart here of worldwide, the number of battery electric vehicles in use from 2016 to 2022, this is according to Statista, this figure has grown from 1.2 million in 2016 all the way up to 18 million in 2022. Still, this is a relatively small number of vehicles on the road that are electric compared to the overall total of vehicles on the road. I mentioned already how many electric vehicles there are on the road today. Now I wanted to highlight the potential for how many electric vehicles could be on the road over the next decade and over the next 2 decades. So some forecasts estimate that there could be 1 billion electric vehicles on the road by the year 2040. Now that's an optimistic forecast. A less optimistic forecast suggests that there could be 687 million electric vehicles on the road by the year 2040. And by the year 2030, those estimates are much smaller at 184 million to 261 million. So you could see the bulk of the growth in electric vehicles is going to happen between 2030 and 2040, according to these forecasts. Now, with this type of growth in electric vehicles, we're going to need that much more charging stations to help charge these vehicles. And here's the forecasted global EV charging network. In 2021, there was about 9 million connectors in outstanding of charging stations, right? That figure is expected to grow to between 339 million and 490 million connectors by the year 2040. And so ChargePoint is in an excellent position to benefit from that growth in industry demand for charging stations, for charging connectors, because there's going to be that many more electric vehicles on the road, which are going to need to be charged, and ChargePoint is in a good position to capitalize on that trend. Which brings me to the second thing that I think all ChargePoint stock investors should know, and that is the lowering expectations for ChargePoint. The company came out and gave a preliminary third quarter announcement saying that, you know what, I know we said our revenue is probably going to come in at 150 to 165 million in the third quarter. Turns out things are not going so well. We actually think revenue is going to come in somewhere between 108 and 113 million. So roughly 50 million less revenue is going to come in the third quarter than was initially expected. That's a big drawdown. That's about a 33% decrease in expectations for the quarterly revenue. But not only is revenue going to be worse, but it's also going to be at lower profit margins. The non-GAAP pre-impairment gross profit margin is going to come in at 20% at the midpoint, compared to 23.5% as previously expected. And that's pre-impairment. The company has taken an impairment charge of $42 million because the inventory it has, it now says, you know what, we thought we were going to be able to sell it at certain prices. Turns out we're not going to be able to sell it at those prices anymore. We've got to lower the price in order to sell these. And so we have to take an impairment charge on our inventory. So that's not been good news for ChargePoint and ChargePoint stock investors. Because of these losses and lower revenue, the company needed to sell more shares, right? They needed to dilute shareholders. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. So ChargePoint sold $232 million of at-the-market share offerings as previously announced on October 11th, 2023. That's going to increase the number of shares outstanding, which is going to dilute shareholders. And I already shared with you why that's not good news for investors when a company dilutes its shareholders. Finally, the third thing that every ChargePoint stock investor should know is that the company has a new chief executive officer at the helm. As announced effectively on November 16th, the company appointed Rick Wilmer as President and Chief Executive Officer and named Mansi Ketani as Chief Interim Financial Officer. Now, an abrupt change in management and unplanned change in management and leadership is never a good sign for investors. It's usually an indication of poor performance and the need to replace and get someone new there to change direction and change the trajectory of the company. And that's understandable when you consider ChargePoint stock price has fallen considerably off its high. The stock used to trade at a share price of close to $50 per share, and that has absolutely collapsed. It's now trading at $1.90 per share as of this recording, and the company keeps moving in the wrong direction. But it's not just the share price that's moving in the wrong direction. It's the company's performance as well. If you look at ChargePoint's operating income since 2021, it's just moving in the wrong direction and moving in the wrong direction more quickly. The company lost $364 million in the most recent trailing 12 months. I would not be surprised if this figure is moving lower over the next few quarters as the company continues to report losses and growing losses on the bottom line. And so you can understand why the board of directors felt that they needed a new manager, a new CEO to come in and help improve the performance of this company. So there you have it. Those are the three things that I think every ChargePoint stock investor should know. Of course, there's a lot more to know about the company, and I've got a whole playlist on ChargePoint stock that you can watch on my channel. So please go ahead and go there and look at those videos if you want more analysis on ChargePoint stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of the subscribe button, you can get free financial analysis from a finance professor with decades of investing experience. So what are you waiting for? Hit the subscribe button.